Hi, Epstein, and here we are with your morning flash update. And this update is for Wednesday, the 15th of January, 2025. And the time right now, 8:25 a.m. Central Time. So let's go to the day's news because there's a lot of it and it's important. First of all, the mortgage market headline numbers. These are blowout numbers, any way you want to look at them. The index up 33%. The purchase index up nearly 27. The refi up 43.5. Who's refining at those numbers? I don't know, but that's what is going on. And we saw that when, if you're part of my Spider ETF subscriptions, when I was talking about the blowout numbers in housing that KB offered, and I said you're probably going to see XHB and Toll Brothers and others move to the upside. That's going on already. The consumer price index, this is what the market was waiting on. Came in at up 0.4. It expected it up at 0.3, and the prior was up 0.3. Month over month, that was a hot number. The core number, on the other hand, came in up 0.2, and this is what the market cares about. It expected 0.3 in the prior month 3. So let me explain what that means. You get the noise in the headline number because it's food, energy, and everything that jumps around. But when you strip that out, that's what the market looks at. You can see that energy prices were up 2%. You see that food prices were up 0.3. The CPI price index year over year up 2.9%, right with what it expected. But that is 0.2 higher than the prior. And the core CPI, and that's what you want to study, up 3.2, down 0.1, and that's the key. So the two core numbers gave the market a sense of relief, and I think that's super important. Then we come to the New York State Empire manufacturing number, and it's terrible. There's no other word for it. It's terrible. You were down 12.6. You expected it up 1, and the prior month had been up 0.2. You did see the employment jump, but you saw new orders crash, that's the way to say it. Prices were up. You saw that the prices paid were up. You saw that the inventories were up from last time, not from last time, not nowhere near as much. So they're not putting away as much there. And the shipments fell. Just not a good set of numbers. We're going to get the EIA stockpile at 9:30. We're going to get Fed Chicago president of the Fed, Goolsbee, talking today at 11 o'clock, and this afternoon we're going to get the Fed Beige Book. But the way to look at all this, in my opinion, is that you just had a very good report. It will not do anything for December. I don't think it'll do anything for March. What I think it does is it puts the Fed on hold till the summer, but I don't think you're talking that you're going to 5% 10-year note right now. And when we say that, we should come over here. And you can see in the bonds, you're up nearly 2 points. So that is fading away in the 30-year, the 10-year up nearly a full basis point in the futures. That will take that number back under probably 4.7. 5-year and 2-year all doing the same. In the currencies, you know I have a special report out on the dollar. This fits 100% into what I'm looking for. The market got to the second price count. That's often a stall point. It was 109.83. You're back down to 108.46 right now. You could slip a little bit lower, but I don't think there's a big downside here at all. And I think that what happens over time is the other banks, be it the euro, be it the British pound, you'll start hearing them talking about cutting rates now, not having to raise them, because this takes some pressure off of them if the U.S. is staying steady and not having to raise rates. And you heard what I said, not having to raise. There's been talk about that. I don't see it. The reality of the situation is the Fed is not going back to a 2% target. I think they should abandon that and come up with ranges rather than a number, and I think that would suffice to do them better. As you heard what I just said, we have our special report on currency. I cover the price counts. I cover seasonality. We're going to take a look at what the charts look like. We're going to talk about the pullback that we've been expecting in the market and the reasons the market probably still advances, because don't forget, next Monday we get President Trump. He steps into the game, and he steps in. We'll get some tariff talk. We'll get immigration talk. We'll get all kinds of talk of the things that he promised during his campaign campaign for presidency. Just go to iraepstein.com, move your cursor to the top. That's another way to look at it. If you're on my mailing list, I'll send a final reminder on it today as well, because it does go off our website tomorrow, and I'm preparing another report already. I'm Ira. You have yourself a great trading day. I'll catch up with you at the end of the day with the market wrap-ups. Take care.